You're going to love the show because so much of this news directly affects your money. And, you just heard about the trade deal in the news there. Of course that affects your money. That's easily the most impactful headline today. And I mean for you personally, because think of how much stuff that you buy from China. Look at all the great cheap junk that you get at Dollar General and Walmart. Look at all the great cheap fashions that Miss Parker gets from, Shein and Temu.
Hi, Miss Parker.
Well, some of that was at a risk of jumping up. Now it's not. Scott Bessent announced this morning, and then Donald Trump followed up with the little signing ceremony and a brief availability to the reporters. But I can sum it up. There's a new temporary deal on tariffs between China and the United States for 90 days, stipulating that the United States is going to cut down our tariffs against Chinese imports from 145% to 30%. And then in return, China is going to reduce its tariffs against U.S. imports from 125% to 10%. So we're actually getting a little bit better of a deal for maybe the next 90 days or until they announce the next step. However, that's not all of them. Tariffs against some Chinese imports are staying the same. So tariffs against cars, steel, aluminum, the big ones are going to remain in place. So with that, look at your markets. I checked my my IRA account. Just reached an all-time record. That's right. The Parker retirement account. Not only has it recovered everything it lost in the downturn since, I know, thank you. Hell of a do-it-yourself investor over here. Not only have I recovered everything that was lost since April 2nd, Liberation Day, I have now surpassed that. So this is the highest it's ever been. Thank you very much. If you would like some future tips on successful investing, we have Bill Dindy coming up in the next segment. Do not listen to me. I mean, partly it's not that I got lucky, but I had some money on the sidelines, so I dumped it in when there was the first big 10% drop. So I was almost guaranteed a win for whenever it recovered. So unless we were just going to stay in the dumps forever, this was an inevitability, which is why I didn't freak out, and you shouldn't have freaked out when the media was freaking out a month ago. Oh, we're taking the economy. It's all terrible. This is going to impact the poor and least among us the most. Oh, stop it. Because this is huge. You don't understand. Like, getting this trade deal resolved doesn't mean things are going to go back to normal. In fact, this may lead to a whole new era of businesses booming that were otherwise kind of capped out. Opening up China and India would be about 3 billion new potential customers for American businesses that are right now shut out of those markets. So just China, 1.4, 1.5, whatever they're at these days. So $1.5 billion. We have seen what being open to the entire globe has done for our tech companies. That's one of the reasons why our tech companies here in America were the first companies to be worth $1 trillion. And, it's started off with just one, and now it's like 5 of them. Now there's like Amazon, Google, I think Facebook and Tesla. They're all, trillion dollar companies. But that's because it's almost infinitely scalable. When you start a Facebook, it is open to everyone in the globe that's already on the pre-existing internet. If you sell beef, if you sell cattle, if you're in a cowboy here, listening in North Texas, you've had a lot of these markets closed off to your cows. They don't want it. They don't want your steaks. If you're a farmer, they don't want your produce. India has like a ridiculous tariff on most American produce, like 900% or something ridiculous like that. Think about if they have now, it's not like they're going to get 3 billion new customers, but they'll get 3 billion people who will look at their products and decide whether or not they want to spend the money on that or whatever the alternatives are. And so it's 3 billion potential new customers, and 3 billion potential customers. That's 10 times the population of the United States. Now I'm rounding it, so this is very rough math. But for all of these companies that deal with something tangible, not just an electron going through a copper wire or fiber optic wire, but people who actually make stuff and sell stuff, or they make food and they make animals, this could be huge for them. Like, they couldn't just double in size. They could be 10 times their size as soon as this all shakes itself out over the next 5 to 10 years. And the prescription drug order that you heard in the news here, this is essentially a trade deal too. This is the Donald Trump signed an executive order today, giving drug companies 30 days. Whatever you're charging other countries, you have to charge us. No more of this. Hey, you can go down to Mexico and get the exact same thing for 1/10 the price. Or you can go to UK and you can find this for 1/10 of the price, or Canada for 1/10 of the price. Because this is essentially a trade deal. Because if you're a free market capitalist of any sort, of any variety, and you see drugs being sold cheaper in some other country, you know the obvious solution is, well, why don't you just go to Mexico, grab a whole bunch, and come back here and sell them for cheaper, undercut the people that are selling them here. But you can't do that. Why? Trade restrictions. So this is, not a healthcare bill. This is an economics bill. This is the same thing that I think confused a lot of people about the Obamacare situation. That was not a healthcare bill. That was an economics bill. It didn't have anything about a Band-Aid or Erlenmeyer flask or a Bunsen burner or a lab coat in there. This was all about who's going to pay for it once it's already done. Is it going to be covered by the government? Is it going to be covered by private insurance? Is it going to be covered out of your pocket? Or is it going to be covered by magic fairy dust that ends up in deficit spending? So what we have here is just those two headlines actually are going to affect pretty much everybody listening to the show today. The China trade deal, absolutely affecting you. The prescription drug deal, well, if you're on prescription drugs and this is something that could be found cheaper overseas, this is going to change your life. And you think about most of the people on prescription drugs are people who are older, people who are in retirement on fixed incomes, and they have no wiggle room. They're not getting a raise. They can't go out and make extra money. They can't get a side job. And to lower their prescription drugs, even just by a few percent, would be a game changer. I mean, and I say game changer not lightly. Like, it instantly raises your standard of living above what it otherwise would have been. So these are two amazing headlines. And I'm going to get some help breaking this down on how this will affect your pocketbook coming up next. We have financial advisor Bill Dendy of Alicorn next to talk about the China trade deal, the raging stock market, prescription drug executive orders. This is all affecting your money. Find out how next on News Talk 820 and 93.3 FM WBAP. Well, the top news story is all economics. The China trade deal, there's a 90-day new paradigm where we have 30% tariffs on their products. They have 10% tariffs on our products, with a few exceptions. Steel, aluminum, cars are still at their sky-high levels. But the financial reaction to this is fantastic. You have the Dow, it's up. Look, the Dow's up 1,000 points today. That sounds like a lot. It's 2.5%. S&P's up 3%. It's a lot for one day, I guess. But it's not the NASDAQ's up 4%. But it's not like a skyrocketing rocket ship to the moon. But this has been a steady 3 weeks of just incremental gains. And we're getting a little leap instead of the incremental gain today. And the leap so far, we'll find out in about an hour if the market closes above where it closed on April 1st before all this tariff liberation day stuff started. Right now, it's above. We will have recovered it all. And I want you to ask yourself, have you been hearing the same amount of headlines on the way up that you did on the way down? You have on WBAP? What about on these other platforms? What about on, some of the regular channels that you're skeptical of? You think CNN is going to spend nearly as much time touting the fact that we've recovered everything in the stock market as they did when it went down 10 to 20%? Of course not. But Donald Trump giving some statements on the new situation going on today. I have a new term I just learned from him. I mean, it's not like the technical term or an official term, but he calls it the fat shot. Ozempic, Wegovy, Mounjaro, all these semaglutides or GLP-1s, or man, we're all just amateur pharmacists at this point. He called it the fat shot. And I love that so much. I'm going to start calling it the fat shot. Can I call it the fat shot? Am I allowed to call it the fat shot since I'm not fat? You know how you can't make fun of women unless you're a woman, or you can't make fun of people of color unless you're a person of color. Can I, as a person who is not a person of size, can I call it the fat shot without getting in trouble? Because Trump did, and I thought it was hilarious. But he's telling a very important story in the middle of this. I divided it into two clips here. But this is a perfect example of what we're talking about.
I'll tell you a story. A friend of mine who's a businessman, very, very, very top guy. Most of you would have heard of him. A highly neurotic, brilliant businessman, seriously overweight, and he takes the fat shot drug. And he called me up, and he said, President, he calls me, he used to call me Donald, now he calls me President, so that's nice respect. But he's a rough guy, smart guy, very successful, very rich. I wouldn't even know how we would know this, but because he's got comments. Said, President, could I ask you a question? What? I'm in London, and I just paid for this damn fat drug I take. I said, it's not working. He said, I just paid $88. And in New York, I pay $1,300. What the hell is going on? He said, so I checked. And it's the same box, made in the same plant, by the same company. It's the identical pill that I buy in New York. And here I'm paying $88 in London. In New York, I'm paying $1,300. Now, this is a great businessman, but he's not familiar with this crazy situation that we have.
So that's a fantastic example, but we've also heard others. Insulin in Canada is only like $12 a dose, and here it's like $150 for a month's supply. They aren't exact numbers, but you heard a lot of those stories about how the exact same drugs sold somewhere else are a lot cheaper, made by the same company and everything. Well, you and I could figure out that if this happened in a vacuum, then you could just get on your phone and order your drugs from the UK. Get your fat shot from London instead of down the street at Walgreens. But you can't do that. So the president signed an executive order today telling the drug companies, you've got, 30 days to figure out how you're going to do this, but we're not going to pay more than other countries pay. I don't know if you're going to lower our price or raise their price, but you got 30 days to figure it out. So much of this affects the people that are listening right now. If not you, just give me a little grace to harp on this, because this is huge. And this is huge for people who could use the help the most. These are the people who are the least flexible. You know, if you are being drowned by prescription drug costs, I'm going to go ahead and assume you have some health problems. And so we have the people who aren't healthy, who aren't the strapping young bucks who can pull themselves up by their bootstraps. Most of these people are retired on a fixed income. And so you have the double whammy of maybe things are going to be cheaper from China or remain about the same. At least they're not going to go up. But if your drug costs are going to go down, we are raising the standard of living. If we can get these drug costs down, we are raising the standard of living for the unhealthy and for the elderly. And that's a fantastic thing. And it was just all with economic policy. We didn't have to go mix any chemicals together and come up with a new drug or do any research. This is all economics. This is why we focus so much on economics on the James Show. This is the news that affects you and just hits you in the face, whether or not you pay attention to it. So I find that absolutely fantastic. So following up with that, Donald Trump, again, tried to ask the drug company about that, and he didn't like the answers he got.
I brought it up with the drug companies, represented by somebody who's very, very smart, good person, too. And we argued about it for about half hour, and then finally he just said, because they can't justify it, he just said, look, you got me. You got me. I can no longer they've been justifying this crap for years. They said, oh, it's research and development. Well, I said, well, research and development, other countries should pay research and development, too. It's for their benefit.
Hell yeah, and really, there's no acceptable excuse on why it's cheaper in other countries. You know, if you want to go to a store in Mexico and go to a pharmacy, there's all kinds of things that you can just buy over the counter that you can't buy over the counter here. That's one of the reasons it's cheaper. Because between you and the drug manufacturer, there's not a pharmacist or really a pharmacy benefit manager. And that is one of the crusades Mark Cuban is on that I agree with so much. And the fewer middlemen you have between you and where the drug is made, of course, the cheaper it's going to be, the more accessible it's going to be. You don't have to go see a doctor and get a prescription. There's another cost. If you really wanted to make drugs cheaper, get rid of the whole prescription system, period, point blank, end of story. Oh, we can't do that. Why not? Other countries do it. They're fine. What, you have people under the bridge over here off Woodall Rogers that are ODing on antibiotics? No. So why are we adding all this cost? Is that good for you? It's good for the medical community. It's good for the doctors. It's good for the pharmacists. It's good for the pharmacy benefit managers. It's good for Big Pharma. It's good for these people who have a gigantic lobby. But it's not been good for you. Donald Trump may be doing something about that right now. The other big cost is FDA approval. It may cost you $100 million to develop a new drug and then $300 million to run it through FDA testing. Where it's not like if the FDA didn't exist, you wouldn't test it, but you would probably do cheaper, more effective testing because you're still going to be held accountable with class action lawsuits if it hurts people anyway. So what's the point of the FDA? That's a different conversation for a different day, but today you're getting some real wins today. Don't expect for the media to backtrack and say, boy, we were so wrong about this tariff thing. We were so wrong about this prescription drug thing. Donald Trump really did a good thing. Now, he's not going to get glowing coverage. I don't know how awesome the news would have to be for their narrative to change just for one day. But, I mean, between what's going on just with the economic stuff, and then you have the peace deal with India and Pakistan, you have the last American hostage returned alive from Gaza. He scored a free presidential plane paid by some sheikh in Qatar. Russia and Ukraine had peace talks over the weekend. I mean, this guy really should be on the cusp of Nobel Peace Prize nominations, but I would be happy with the positive headline. Coming up, Bill Dindy, financial strategist from Alicorn Investing, is going to tell you more in detail about how the news of the day is going to affect your wallet next. The Trump executive orders, China trade deal, we'll cover it all. If you have some questions, 800-288-9227, 800-288-9227. It's News Talk 820 and 93.3 FM, WBAP. Hey, homeowners. James Parker here for Blue Ribbon Roofing. And we just got through this last round of storms. I think we're going to be clear for this week. So it's a good week to get your roof checked out. All you got to do is go to BlueRibbonDFW.com. I skipped the Blue Ribbon part. Schedule a time. They'll come out. It takes about an hour or so. And if they don't find anything wrong, you just get a lot of documentation and pictures, and you get to keep this as a baseline for if something does go wrong in the future. You can use that to get your insurance claim expedited. And if there's nothing wrong, it doesn't cost you anything. So really all it is a little bit of your time to make a phone call, to meet the inspector, to look at your roof, and that's about it. Now, if you do need a new roof, or if you do have some problems, we'll work about, can we just patch it up? How much to get just this little problem cost? Or if you need a whole new roof, tell them you heard it on the James Show. You get a free ridge vent ventilation upgrade. They'll also help you deal with that pain in the neck insurance company, because this is something they've done thousands of times, and I've only gotten a new roof once in my entire homeowning career. So if you want a family-owned local company that makes it as easy as possible, as fast as possible, with as little hassle as possible, with as much help as possible, go to BlueRibbonDFW.com. BlueRibbonDFW.com. And a lot of the headlines today, you're going to love it because it affects your money, and in a good way. The interim tariff deal. You know how sometimes the Cowboys have an interim head coach? Well, we have a 90-day changing of the guard in our tariff regime in us versus China, where their imports come down to 30%. Our imports into China go down to 10%. We'll try and work something out within the next 90 days, or else it skyrockets back. So that's good. The stuff at Walmart isn't going to get exponentially more expensive if this can work itself out. And then also, there's a lot of good news that you should feel about the prescription drug executive order that Trump announced this morning that may lower your prescription drug costs. So how do you take advantage of all this? Well, we have a local financial strategist from Alicorn Investing, Bill Dindy, back on the James Show. Welcome back, Bill.
And you know, it is always a pleasure to be with you, especially on days like this where people are so excited to finally see that bounce up in this market, which has been acting almost schizophrenic since November, not knowing if it needs to be higher or lower because we don't know what the future holds with threats of tariffs. And then you tariff us, we'll tariff you back, and we'll go up to the moon and basically embargo each other. The 30%, 10%, while that may have seemed really high 6 months ago, right now looks like a major win on Wall Street, and it allows businesses to go ahead and start getting those orders back in from China, and the market is loving it.
Well, Dow's up 1,000 points, which sounds like a lot, but 2.5% happens from time to time, even in intraday trading. However, I think the more important milestone is the markets have made up everything they've lost since April 1st, and Liberation Day, when the tariffs were announced, was April 2nd. So I guess, you know, we're not quite back to record-breaking territory, but we're out of the hole.
And that's exactly the way Wall Street's starting to feel about it. Now, of course, they're going to be start looking for that next rain cloud on their horizon, and don't start counting your dollars before you're cashed out, because the market can pull back just as quickly as it moved up. But today, the news is positive. The next 90 days, the hope is that things are worked out to be more permanent. China being one of our largest trading partners, and all of us kind of addicted to the goodies that come out of China. It's like, I don't know, brothers disagreeing. You might think one is getting a more share than the other, and maybe you have to raise your voice, and sometimes maybe a shoving match, but you sure don't want to have an all-out brawl. You don't want to permanently damage those relationships that have to continue for the benefit of all involved. And I think that we saw that China did not want to back down. They were one of the last big players to go ahead and negotiate something that made more sense. And it sounds like both sides were ready to de-escalate the whole situation. And I think that de-escalation is positive for consumers. It's positive. Free trade economists like to see no tariffs at all. But this 30 and 10, it sure is good compared to where we were just a week ago.
Well, Bill Dindy, I remember having you on about a month ago, and you and I were cautioning against the people in the media who were saying, oh, your retirement's been wiped out and crushed, and people are getting ruined all over the place. We're like, no, hang on, just give it a little time here. And it looks like we've sort of been proven right.
Oh, my gosh. You know it. And it does once again show that the consistent investor tends to come out the best. The person who was still making their contributions all through this turmoil was buying at lower levels. And I'm talking to folks who are, 10% in the last couple of weeks. And I know that that's not that big of a deal. You don't get excited when you get a 10% discount at the store or when you make an extra 10%. But 10% on your money in a couple of weeks is pretty okay. It feels good. But again, keep that long-term perspective and make sure that you don't get greedy and allocate more than you should in markets that really are forever have been volatile. You're going to have that basic sense of volatility, and there are various types of investments that can reduce that volatility. And so it is very wise to make sure that you don't now in euphoria get overexposed and buy high, and then when you get sad again, sell low.
Right. Well, Bill Dindy, financial strategist at Alicorn. Another thing we were talking about is if you are unhappy with the way your portfolio performed in April, you probably need to change the way you're invested because you're exposed to too much risk. If you can't handle this, or you weren't expecting this, or this caught you off guard, or this could ruin you, you shouldn't have had your money in those positions. Well, now that we're out of the hole, it's time to go ahead and make some of those moves. So for the people who didn't like what their portfolio did in April, what changes do they need to make now in May?
Well, I think you're exactly right. When we're in a storm, it's a bad time to jump out of the boat. At that time, you stay in the boat, you wait till you get back to the safe harbor. You don't have to go out that far again, or you don't have to take such weather risk in the future. But now that we're back in the harbor for some people, they feel like they've gotten a recovery. As we said a month ago, if you don't like a 10 to 15% drop, you're going to hate the real bear market when it comes in at 30 and 40% down. And those are going to happen. Over time, they always have. And so you need to be able to not get shaken out at the bottom. If you were tempted now, well, gosh, while we're back up, it's a great time to look at things like even the basics. My grandfather's favorite investment, the CD. He'd drive across town and get a higher CD rate. You don't have to get that conservative, but investment-grade bonds now paying 5 to 5.5% again for 7 to 10-year bonds. And so there are things that will give you a rate of return that is a little higher than the inflation rate and not have the same volatility as the stock market. And if you don't have comfort in that area, it's a great time to talk to that certified financial planner or the CPA that's trained in this area. I will say that there are a lot of people offering financial advice, and you find some of them are network marketers and some are doing different things. So make sure you're dealing with someone who really understands investments when you talk investments, but it's a great time to go ahead and round out your portfolio and get some things that may not have the same risk characteristics as equity.
Gotcha. Hey, you're a fun guy to talk to, Bill Dindy, when we have positive news like this. Thanks for coming on.
God bless you. It's always a pleasure.
All right, this is Bill Dindy. He's a financial strategist with Alicorn Investing. All right, to make some more sense of all the financial news, there's a ton of financial headlines that I consider more important than other headlines because it actually affects your money. Kathy DeWitt Dunn is on the James Show yet again. Welcome back, Kathy, for a return visit to the James Show because this is great circumstances to talk about finances. The market's up, trade deals are being worked out. Things are pretty positive today.
Wow, isn't it just great just to hear all the news and to wake up to see the Dow futures on the rise, and maybe we have a deal. I can't wait to see what happens.
Well, we look at the markets, and they haven't closed yet, but it looks like they're going to close in territory that puts it above where they were on the close April 1st, which was the day before Liberation Day. So not only have we started digging ourselves out of the hole, we're out of the hole.
Yeah, and great news. I mean, if you take a look at the markets, probably they're going to close up to 3%, I think, on Monday. And I think everybody just has great optimism with the U.S.-China trade agreement. And boy, we needed to see some great news. And finally, it looks like we're going to have a deal. Markets like deals, and they like confidence.
Is there some concern about uncertainty? This is just a 90-day pause, and if they don't get things worked out, maybe the tariffs can come back and rock this market again.
Well, we're all concerned about that. But I will tell you something, James, if you have a plan in place for retirement, you shouldn't be looking at the markets every single day. However, with that being said, China needs this deal more than we do. If we take a look, I mean, China had $438 billion of imports into our country, and yet we only exported $143 billion. Who needs the deal more, us or them? So I think that we're on the road to recovery. We'll take a look at what happens with the future markets. We got 90 days to figure it out. And I think Trump is bringing back a little bit of the confidence in the market that maybe perhaps people weren't seeing. And then we take a look at what happened also today with the pharmaceutical industry. Markets like great news. They like headlines that really make people feel good about things.
Wouldn't that be bad news for the healthcare sector?
I think it would be, but I think the average consumer takes a look at it and says, you know what, that's going to be more money in my pocket. And we need to identify healthcare and the crisis that we have here in the United States and take a look at it. But any time the consumer sees some good news, it makes them feel good, right? Just like eggs. They came down a little bit. They're expected to go back up. If I go to the pharmacy and I'm not going to pay $800 for a drug, I'm going to pay $30. That makes me feel good. So we'll see what happens with the healthcare industry as a whole.
Yeah, that's kind of how I feel about it. There's more people that are buying prescription drugs than selling it, so lowering the cost would do more good than harm, kind of the converse here. But how do you think that's going to work out? Like, do you think the drug makers are going to lower the cost here or raise the cost in other countries? Like, I'm not sure if this is going to result in cheaper drugs.
Well, I mean, I guess to be told here in the future, but if we take a look at, some of the things that I was reading today, that maybe in some countries it'll come up a little bit. Maybe there's going to be a happy medium, across the world. But I mean, it's kind of ridiculous to think that you can go to another country, get some drugs for $20, $30, and you come back to the U.S. and that prescription's $800. There's something that has to be done with that. And I think that you're going to see that the consumer really wants to hear how that's going to impact their bottom line. They're not looking at earnings on Wall Street. They're looking at their paycheck, and they're looking at their checking account and looking at how much money they're paying out of pocket when Medicare doesn't cover something. So there is some good news. I mean, it can't be all great, right?
Right. But Kathy, let's talk about this other demographic. You mentioned that, if you have money saved for retirement, you shouldn't be watching the stock market. But those rules kind of change as you get really close to retirement, or if you're kind of already retired. So what's different for them if they do need to worry about the convulsions of the stock market?
Well, first of all, for people that have a plan in place, you have to take a look at having income that can keep up with inflation. There's a lot of great plans out there and strategies. Make sure that you don't have as much money at risk as you get older, because it's not really the money that we make that it impacts our portfolio. It's how much money we lose. So we need to have our eyes on our portfolio, and we need to make sure asset allocation, that everything inside of our portfolio is doing what it's supposed to do so we can cover our expenses, because taxes and medical expenses are the two most expensive items that I see with people that come into my firm all the time. So we have to identify it. We have to plan for it. And you know what? We got to have income that's going to keep up with inflation.
Well, Kathy DeWitt, you have the show that airs twice. It's so good on the weekends here on WBAP. Aww. You're on Saturday twice. You're on at 11 a.m. and then again in the afternoon at 4. What y'all talk about last week?
Oh, we just talked about all the different options that are out there as far as people looking at guaranteed lifetime income. Because of the interest rate environment that we're in right now, we're really helping people put some plans in place where they don't have to worry about their income in the future. And then we also take a look at asset allocation. People definitely want to have exposure to the equity markets, but doing it safely. So what we like to say, if we have a plan, we don't have to worry about it. And we're going to have ups and downs in the markets. But if you have your foundational income plan in place, then we don't have to be worrying about everything that's happening on Wall Street and every breaking news report, and we can feel confident in knowing that we can go through our retirement years happy and spending time with our family. That's what's important.
I think you have to do some of the same tug of war I do, because in my audience, I have people out there who have a bunch of money saved and they're invested and they want interest rates to be high so they can get a big return. Then I also have listeners who are in a boatload of debt and they got a mortgage and credit cards and car notes. And so they kind of want interest rates to be lower so that, they can have some breathing room. And so I don't know which one to cheer for more.
Well, I think the biggest thing is that if you have a budget, you have a plan in place, and you have income coming in, and you're working with somebody that's on the same page with you, all of that isn't going to matter in the end because it's planning and income. Because when you go into retirement, you can't show up to Capital One and have it refinanced. You've got to make sure that you've done all of your work on the front end to make sure you can have fun.
Well, it's a fun day to talk to a financial advisor. Thank you very much, Kathy DeWitt.
Thank you for having me again.
All right. You can catch DeWitt and Dunn Financial Hour, 11 a.m. and 4 p.m. on Sundays here on WBAP.